And we are live. How you guys doing? Let's get started. Okay, so yeah, let's get straight into it here. S&P is obviously showing us a correction, right? Now, a lot of this correction is coming from the geopolitics, right? Is inflation going to go higher? Because is there going to be an escalation in the war? Is there going to be escalation? That is the main fear for the market. Now, you do have profit taking also taking place. You know, we in Q1, gray is Q1. We were straight up the entire year, right? And one thing that I got marked here is anchored VWAP. So instead of looking at your 50-day SMA, your 200-day SMA, I'm looking at year-to-date volume weighted average. And on that year-to-date, we're pulling right into that trend. Okay, we're pulling right into that trend. And if we cannot hold this support, which is basically all the volume that came in from the beginning of the year, January of 2024, then our second line of support is going to be the volume weighted average from the October low, right? So we're looking at those two lows here. October low. Oh, you guys can't see it on TikTok. TikTok, go ahead and jump over to YouTube to see the entire chart. My phone is vertical. The charts are horizontal. So if you want to jump on there to see the whole thing, you might miss a couple things. Anyway, so when I have the anchored VWAP from the October low or the Santa Claus rally, if we cannot hold this level, that's the next support, right? Until then, it looks like we're going to bounce here. And I know people are like, oh my God, we're going so low, overreaction. I don't think so. The earnings picture is still good. The employment picture is still good. Inflation, I think, is going to turn over the next couple months unless the geopolitics start to get worse, right? Unless the Iran Israel war picks up for some reason and we see oil prices spiking. Now, Q2, the weakness in Q2, obviously we broke just on a technical basis. We did break that uptrend. So we're in a downtrend. We are now in a downtrend or sideways. We'll see if we move sideways or continue to fall. I think we're going to have a retracement by the end of the week. And then we'll see if we can, this is another anchored VWAP from the highs or from that big rejection, this is an anchored VWAP from that big rejection. Anchored VWAP here is in yellow. Let me turn this purple so it's a little easier to see. I'm going to turn this purple here. I think this is a better purple. Maybe you can't see it that good. Oh, well, we'll go back to white. I thought it would be a little easier. So anchored VWAP, this is our range, right? Looking at those anchored VWAP levels. We're obviously red. I think we're a little oversold. This is SPX, by the way. Let's go into see what the RSI looks like. We have a little more room. We have a little more room to be oversold on the RSI. We are looking at the daily chart. We're not oversold yet. So we might have a bounce and then a rollover, kind of how we did back in at the end of last summer when we had that correction into October. Traditionally, well, not traditionally, but if we look back on the cycle, we should be correcting for a good 2 months, maybe April, May, who knows? Let's look now. If you're not on YouTube, jump over to YouTube so you can see the seasonal chart. Okay, this is I call this a seasonal correction because we're right in line with the seasonality, right? The election year seasonality, S&P 500 election cycle. So if we go back to that cycle, you can see we should have had the correction back in March on YouTube. If you guys are on TikTok, you're not going to be able to see. Jump over to YouTube. There's a link in the description or in my bio. We're live on YouTube. So you can see the Q1 correction never came. We were straight up, but typically you get that correction and, there's going to be some type of retracement. Why? I think we're also headed into earnings. We're headed into earnings. We are in earnings, but as a matter of fact, Q1 is done. Now we're looking at earnings season, right? April, Joey Kakomo, you just say, oh, April's bullish. April's bullish. Well, I think you should pick your spots. My view is I think you should start picking your spots. We're looking at April. And the question is, can we hold up here? We're going to get to all that, but let me get back to that chart. So you can see seasonally, if we look at the seasonality, back to the seasonality, we should have had a correction and it didn't happen, but we're headed into earnings season. That's where we're at now. The biggest risks, there's 3 risks to the market. I think those risks are, number one, earnings. Are the earnings going to match up with the growth, right? Is the PE, we've had prices go vertical. Obviously, S&P is up, NVIDIA is up, A lot of stocks are up a lot. They've been gaining in price. So are the earnings going to match the price? Right? That's what the market's selling off for. On top of the profit taking, on top of tax season is over, on top of we had 3 consecutive months of rising CPI. It wasn't tremendously rising. Forward looking tells us that we're going to come down, right? And this is it. Like everything's in shelter. We look on the shelter. Look, shelter CPI is holding up I'm sorry, yeah, shelter is holding up a lot of the CPI. It's like 60% in some measurements, but Zillow or forward looking, the lead on shelter tells us we're going lower. So I think inflation will come down unless one big risk, unless we get geopolitical uncertainty, right? If we get more geopolitical uncertainty, that is the risk. We cannot guess that though. That's not something we can guess. So what do we do to guess? Hey, if we don't support this, if there's more geopolitical uncertainty, what do we look at? You look at the macro forces, you look at the free market forces, and that's going to be the dollar, right? That's going to be the dollar. What do we say? If the dollar broke out of this range and it moved quickly, we always say this, the dollar is a macro force. It's a signal to risk on or risk off. And we had the dollar, moving pretty strong the past couple of days. And the market, what was it signaling? A war. Now, this was crazy. This was pretty unique here. Before Iran actually attacked, however you want to mix it, people are getting upset saying, oh, well, you know what? We attacked the embassy in Syria. Sure, regardless, the dollar started to move before that or right when that happened. So the dollar was already signaling that there is some type of risk in the market when it moves this quick. Okay, now we're still in the sideways range, so I'm not concerned yet. I'm not too concerned. It becomes it becomes a headwind to to risk assets, to equities, to crypto. So I'm not too concerned. Either way, we're coming into resistance, but either way, when the dollar moves quickly, something is going on. Something is not good for markets. People are piling into US dollars because there's risks on the table. Now, with that dollar moving higher is also interest rates moving higher. 10-year rates, not the Fed. We're not talking about the Fed here. The Fed, has their meetings. They're going to let us know what they do next based off the data. But these are the free market forces. These things are going to price in risk or price out risk every single trading day, 5 days a week, sometimes 6 days a week, right? And rates also broke the level. So you have dollar up, rates up. That is tightening. We said, multiple times when you get the dollar, when you get rates moving higher, breaking levels, it's going to put a cap or a limit on how much higher the overall stock market can move and the crypto market. There's other factors, but these are conditions, right? If money becomes more expensive, then you can't keep invest. Well, you can invest, but you're going to get a net outflow of investment capital. And if the dollar moves up, there's some type of risk in the market, period. Now, the reason why I'm not too concerned yet is because oil hasn't broken out. If this does break out, I'm going to be more concerned. And so we'll take a look here. This in green is basically peak oil. This is going to be the peak oil demand going into the summer. We're going to start hitting peak oil demand. And I want to see how price reacts. Are we going to break out and go back to all-time highs? We possibly could. That wouldn't be great. It would be good for energy stocks, for some energy. And if you're commenting on TikTok, just stay tuned. I'm gonna go to your comments. I'm gonna read all your comments. Let me actually scroll up. I'm gonna get to all of your comments eventually. If not, go ahead and throw your comments on YouTube so they can stick, because on TikTok they fall to the bottom or they go to the top. I can't see them. Throw them on YouTube so I can so I don't forget them, or I'll just go back and read what you have to say. All right. So, anyways, oil, right? Oil is hitting the trend. This is a log chart. If you don't have a log chart, it looks like oil is breaking out, but we're not there yet. Now, this is a bullish chart. This is pretty bullish. Heading into summer, the assumption is that oil breaks out, but I'm not too sure. Maybe traders are, bidding into this. Maybe the war doesn't expand. If it doesn't escalate the way a lot of people expect, then oil continues to consolidate into the summer, right? Going into summer. We'll see how that happens. Now, I put a video up the other day, and what this guy named Paul Sankey was saying, a lot of people don't disagree with him, is that Iran can't afford to start another war or continue this war, because if they do, oil prices go higher. Therefore, they're going to lose a small amount of demand from China, because China is where they get a lot of their volume. I don't know. I'm not an expert on oil, but what I would say is Iran probably can't afford the war, right? They're not going to last as long as Russia. Either way, anything can happen. We never know. So we just got to keep track of oil. If oil spikes, there's risk coming into the table. With oil going higher, we shall also see the dollar start to spike, risk off. What we don't want is the dollar to get above this resistance that's been in place since 2022. If we get above that, stocks are probably, the S&P, Bitcoin is going to take a larger dump to the downside, and we might even come all the way down to the actual uptrend that started October of 2022, which I like to say the actual bull market. If oil does get above that level, if the dollar continues above that level, if rates continue to climb, I'm expecting the S&P to correct tremendously, probably back to the summer high. And it's not like it's unhealthy. It's not unhealthy. It could be healthy as long as, but we're going to be looking at slowing growth, because if energy prices go up, a lot of companies are not going to be able to afford. They're going to have to lay off. Employment goes up. Here we go with the business cycle starting to turn, right? It's just a scenario. We don't know what's going to happen. It is a scenario. But until we get the dollar breakout, until we get rates going higher in oil, I'm looking at year-to-date volume weighted average, and we're finding that support at the moment. Now, the speed of the drop on the S&P, okay, tells me in general, we should have a retracement, and we could pierce right through and come right back down. So I'm not too confident that that is the level. Let me go back to SPX. And if we don't, then I'm looking at the volume weighted average, or the anchored VWAP from that previous low in October, somewhere around 45. I guess I could draw it on SPY. A lot of you guys like to look at SPY, right? Let's draw anchored VWAP from that previous low. Okay, so for SPY, that puts us around 481. That would be a nasty pullback. And I think Bitcoin's going to go down to 50K if that's the case. Could go down even lower. We'll see. But other than that, right, we're still in a transition period. We're in a transition period. Now let's go over the bullish stuff. What is actually bullish? Let me hit a couple of those comments. Higher for longer, baby. Jerome Powell is the best. And hey, if we stay higher for longer, all it means is there's a rotation. A lot of wealthy people are still gonna keep spending, because the higher for longer means they get to collect 5% on interest. Their houses are what, 3%. Some of them, baby boomers, have already paid off their mortgages, and if they haven't, they're paying 3.5% on mortgages, and they're accruing 5% on their cash. So spending, I don't see spending really taking a major dip. It might slow down in April and May. That's my expectation, because there's nothing going on in April and May, right? March was spring break. There's nothing going on in April, nothing going on in May. People will start spending again in the summertime, which is why we might see an acceleration of growth going into the summertime. So get through some of these comments before. Actually, let's go over these macro forces first. Or not the macro force, I'm sorry, the business cycle. Let's hit the business cycle charts that we had come out the past couple of days. Atlanta Fed GDP. Okay, GDP is rising again. Now, it doesn't mean it's tremendously strong, but what it does tells us is March, we bottomed in GDP in mid-March, and now we're coming back up. Now, this is a daily / weekly indicator of growth, and we have growth up and we have inflation up. Okay, if I switch the charts over here, I'm going to show you what I mean by growth up, inflation up. Okay, looking at the macro right here, this is GDP growth year over year in green. We're still rising. GDP is still rising. And then down here, you can see that inflation has had, I guess it hasn't been 3, right? We had 1 down, 1, 2. Is this the right? This should have been, yeah, this is April. We've had 1, 2 rises in CPI. Now, people do freak out a little bit, but if you just use, if you take a step back, okay, inflation is sticky, but it's not really rising rapidly. It's still in the zone between 3.5 and 3%, right? We're not really reaccelerating yet. If we get above 3.7, which I believe is, where's 3.7? 3.7 is right here at the high. If we get above 3.7 over the next 3 or 4 months, then I'm going to be concerned. I'm going to be majorly concerned. But the forward-looking indicators to inflation, forward-looking CPI, are all pointing lower. Let me go back to those CPI leads, okay? Supply chain pressures falling. They're coming down. Shipping rates falling, coming down. ISM, supply chain prices for the service economy, coming down. So CPI is lagging. It should come down unless we get that geopolitical, we get some type of attack, geopolitical unrest, right? Geopolitical risk come back in. So if you're betting on that, you can bet on that. Just keep that on the side. Other than that, inflation is starting to ease. In my view, we look at shelter, it is lagging. Now, if we do get a collapse, Okay, the reason I'm showing this chart, if we do get some type of economic or banking collapse, the Fed's going to step in. This was last March. If we go back to last March of 2023, there was a banking crisis. Okay, probably the third biggest banking crisis in US history. And these are the volumes, the discount window, or the new facility created by the Fed. They injected $500 billion. That is what's going to happen if we hit a recession, or not a recession, if we have some type of financial risk in the the financial system is not the economic system. They're separate and they tie together, but the financial system is a lot easier to heal than the economic system, because the economic system is much wider and it drags out. The financial system, they just inject liquidity. So if we have a banking issue, if there's a commercial real estate collapse, the Fed will step in, there'll be some weakness, rates come down, and they inject more liquidity. That's the game plan in my view. Okay, going back to the charts, Fed GDP, all right, Atlanta Fed GDP rising. Go, you can probably find on Twitter or something. Atlanta Fed GDP now is tracking each week. We had retail sales this week. What are they doing on an annual basis? Again, you're not going to be able to see it TikTok. You have to jump over to YouTube if you want to see it on an annual basis. Retail. So this is economic growth. Okay, on an annual basis, year over year, retail sales look like they're bottoming out. Take a look at that chart. Okay, we're hitting a bottom, and the reacceleration looks like it's starting to happen. So the retail, or the manufacturing part of the economy, which is way more tied to growth stocks, is reaccelerating. And as long as we stay down here, we're building a base, annual momentum goes up. The long-term trend is getting back onto the long-term trend, of retail sales. So we are having underlying growth. If rates are higher for longer, fine, I'll take it, because the economy is continuing to grow. It's still strong underneath the hood. There's not really a whole lot of weakness yet. If we go to industrial production, or remember, GDP is how many things you can produce and sell them, right? All the things that are produced, that's real growth, is production. Industrial production, if we go back to 2016 to 2018, we had a industrial and let me slow down. We had industrial production speed up and trend higher. This was a huge rally in the stock market. We also had tax cuts, fiscal dominance. We're getting a lot of fiscal injections today, and you have so when you get industrial production pick up with fiscal injections, then hey, you have a strong bull market. So this is very bullish. You can see at the end, going all the way to the right, industrial production is bottoming out. It's starting to re-accelerate. What else is starting to re-accelerate? What we always talk about is the business cycle. The manufacturing cycle is also starting to re-accelerate. So underneath the hood, growth is rising. What else do we see? Profit margins rising. We mentioned this in the last stream in a couple videos. And if you want to know, kind of how that looks in the how that kind of plays out when it comes to the actual business cycle, we look at margin growth. Okay, PPI, producer prices minus CPI. That's what this is. So when producer prices, I'm sorry, I made it backwards. Scratch that. It's supposed to say CPI minus PPI. Consumer prices minus CPI. That is your margin, right? So in general, margins are growing where producer prices are not rising, but consumer prices are. So where does that extra money go? Where does that extra profit go? It goes to earnings. That's why I expect this earnings season, and here we are in the first, I guess we're in the second week, to strengthen. Who do we got? What are some big names here? It is, let me see, today we have ASML, Abbott. I mean, the big players aren't going to be till next week, but we do have Netflix. We have TSMC. We want to see how TSMC actually reacts to earnings. NVIDIA is also a big one, right? Because profits drive stocks on top of the macro. You have the fundamentals, which are the earnings, right? Profit margins, that is fundamentals. And those look to be strengthening when we look at the business cycle. Okay. But the macro risks are geopolitical risks. Okay. Technically, we're in a pullback. So putting that all together, okay, let me take this off. Putting that all together, take a step back. Let's see. There we go. How is liquidity looking? Okay, if we look at liquidity, you can see that global liquidity is starting to slow down. What is this? Money supply, credit growth. It is slowing. Okay, it looks like it's going to make a new low. But what we're hearing from the ECB, the European Central Bank, is that they're about to cut rates. As soon as they cut rates, liquidity will start to rise again, global liquidity. And this is Fed net liquidity in white. The white line is Fed net liquidity. Fed net liquidity is still rising because the reverse repo is still rising. Reverse repo liquidity still coming into the bond market to buy US treasuries. So the setup is sometime during the summer, going into the summer, we probably get liquidity come back in and a reacceleration. That's what I'm looking at so far. I don't see nothing deviating from that. Back to the technicals of the market. Okay. We'll see how this plays out. For now, you definitely want to see, the bond market pick up a little bit. We did have a bid in the bonds, right? TLT, long-term bonds. We had a small bid, but they're still in a downtrend. So if we do get more fixed income coming into the market, that's going to slow down rates rising or rising rates, and we should be good. Now let's go to the internals. Move over to the internals before I hit some of these questions. If you okay, all right. You know what? Let me hit some of these questions on TikTok and then see what I got here. Yeah. So you guys can hear what they're saying on TikTok if you moved over. Thanks for moving over. I appreciate it. Um, while we're looking, I think we have what gold breaking out, and I want to show you guys something about crypto and Bitcoin coming up also. All right, so we have I wish I could show these live. I guess I can't. All right, let's go over some of these comments. Seasonal correction. It's fear because 3 cuts might not happen. That's what drove the market. Yes, that is also part of it, that the market is pricing out those 3 cuts. But, the market was already pricing out 3 cuts before we had the correction. And it was already pricing out 3 cuts because of the growth in the CPI. So it is pricing out 3 cuts, but remember that always changes. If inflation comes out lower, then all of a sudden it's 2 cuts, but it's a combination of geopolitical risks. Because what does that mean? That means slower supply chains, backing up the supply chain so prices go up because you can't push production, and that means it's really inflation going higher, right? Also, weaker earnings would definitely do this. Remember, the market will bid up into earnings, and then and I'm adding layers to the correction. It'll correct to make sure earnings match the price. So I think that's also what's going on. Our earnings going to match the price. If you have good earnings season, I think we bottom out in May. We finish off April's consolidation, we pull back, and then we go up. Now, I don't know. We'll see how that plays out. But if earnings are solid, the market will continue. This bull market is not over, right? It is definitely not over. A lot of people say it's over. Every time there's a correction, it's over. The bull market's over. All right. So yeah, 3 rate cuts is one of them. That's for sure. But it doesn't necessarily mean the Fed it's going to be weak for markets, right? That just means the economy is still strong. Inflation is a lot more than rates. Wage gains are going to accelerate. Well, wage gains are falling. That's a false narrative. Wage gains are not rising. They are actually falling, or they're sideways. So that is not a concern. And the good part about this inflation is wage inflation is higher than actual CPI. So wages are gaining. Now, maybe in the real economy, you don't feel it, but that's what the market is bidding off. Oh, people are getting paid more. They're going to keep spending. There is no threat to growth collapse because wages are still rising, right? So that's not negative. The negative is energy prices spike. Even worse than that, because if energy prices spike, people they'll stop spending in one area because they have to pay higher gasoline prices. So spending will just shift. The real concern is supply chain disruptions. That is a real concern because that is a systemic issue. That is not going to be good. I think we correct a lot more if we see that. Scooby Dooby, what up, Scooby Dooby? Haven't seen you for a while. He says global problems fanning the fire of inflation, higher rates coming. Oh, okay, so he's in the camp of higher rates. I think that's a very low probability that there is higher rates coming, because even if inflation spikes a little bit, it's going to hurt consumer spending. If it's in the energy sector, it's going to hurt consumer spending. We'll see. We'll see how it plays out. I think that's all a sign that a very low probability that we actually see rates coming, rate hikes. There's no indication in the Fed minutes or in the beige book that they're going to increase rate hikes. Okay, I'll do the beige book on Thursday or Friday, because I'm still looking through it, trying to see all the different regions, how the economy is working. But there's no higher prices. There's no evidence that they're going to hike rates. That's just a narrative in the market for the bears to feed off of. We need 6 to 7 unemployment to bring down inflation. Wow. I don't know about that, Edward Nano. That's a little extreme. You do not need that. You need productivity growth, which means you need to keep producing more things than people spend, right? You need to keep increasing the productivity of the economy. That stops inflation from rising, because the more things you have, the more productivity, the more supply, the lower prices actually fall. Okay. So you don't really need unemployment. That would actually probably hurt inflation because there's less people working. If there's less people producing things and prices are still rising, that's going to hurt the economy. So I disagree with that. We should be seeing a strong, employment might rise to 4.1. I think that's what the Fed has. Prepare for rate hikes. Okay, Scooby Dooby, I hear you. You're fearful. Dagger 2 cuts ain't even happening. We might not get 2 cuts. We might get 1 cut. There's a lot of people that think we still get 3 rate cuts. We'll see how April and May start to square out. From what I see, productivity still picking up, and inflation should be evening out and lowering. If that's the case, the Fed can start cutting. They cut ahead of CPI. They're looking at forward-looking indicators, right? If you are bullish, you should be scared. I get really bullish when there's a correction because the underlying business cycle is very strong. That's why I'm bullish. The underlying business cycle is very strong. And if we get the dollar peak out and roll over, okay, the dollar peak is going to be very bullish. Okay, let me just show you really quick. We're in a consolidation. The dollar tells all, right? The dollar tells you a lot. This was the bottom of the market. Let me add S&P on here so you can see what I mean. SPX. Let's add SPX. Okay, so when the dollar peaked, okay, for this cycle, stocks bottomed. Okay, stocks finally went up, and the dollar is just a fast way of a quick way. The price action of the dollar is just a quick way of seeing where the risk is in the market. If it's climbing tremendously, there's risk. If the dollar moves fast, there's some type of risk. So when the dollar peaked, boom, stocks bottomed. Okay, well, once we came into this zone, right? Once we came into this consolidation zone for the dollar, every time it peaked again, right? Here's a peak, stocks bottom out, the trend continues higher. Oh, look at this was a little more opposite. Stocks peaked, or no, this is the same correlation. Stocks peak here. What happens? The dollar bottoms. Now, I thought this was going to be a collapse in the dollar. It didn't happen. Point being, the dollar is a very good signal of risk on, risk off. What's happening to the dollar? It's been climbing, and guess what? They can climb together. But once the dollar moves to a certain point really quickly, and we've had a fast move in the dollar straight up, stocks couldn't take it anymore. Now there's more, the dollar is just wrapping all the risk up into price action. So it's not just the dollar, it's other risk on the table. But if the dollar peaks in this range that it's been peaking in, maybe maybe it has a couple more weeks of going higher. If it does peak, I'm expecting the bottom to be in, the correction to be over. So that's what I'm watching. Where's peak dollar at? Okay. And you can also add rates on there at the same time. User says cyclical versus secular. Yeah, cyclical bear. So I'm cyclically short. I think we're going to be short for a couple more weeks. But when I look at full year, we're only going to get more fiscal pumping from, any type of weakness. Joe Biden prints money. Let's make it easy. Joe Biden prints. If employment weakens to any degree, okay, if employment weakens at all, if payrolls come down, if the unemployment rate ticks up, guess what? Those rate cuts are coming back on the table. And what else is going to happen? Bond yields are going to fall. The market goes higher. So this is a healthy correction. You want this correction so longs, people who've missed the rally, can come back in. Okay, healthy correction also for crypto. We're going to get to crypto. Very healthy correction. What's the trend in M2? M2 is always going higher. M2 is going to go higher. Let me try to catch up to some of these. M2 is going higher. There's a lot of different ways to measure liquidity. So obviously M2 is one of those ways to look at it, or money in general. Here's what you want to look for. This is the reverse repo. This is your zero bound. We're almost at zero. What I mean by zero is there is I call the shadow liquidity. There is liquidity coming in to buy US debt. 2.5 trillion, right, is now coming back into the financial system, not the economy. This is the financial system. And eventually it's going to run out. Here's your zero. Why isn't it showing me the line? Come on. Okay, well, anyways, this is the zero bound. Once we get to zero, that's it. There's no more liquidity to cushion financial markets, to cushion the financial system. So my guess is, and Powell talked about this, as soon as liquidity runs out from the reverse repo, from shadow liquidity, expect the Fed, expect liquidity to come straight from the Fed's balance sheet. They're going to turn off QT, start reversing the Fed's balance sheet, start increasing credit. A lot of people doubt this because they think it's inflationary. It is not inflationary, by the way. It is not, because that money goes into the financial system. Okay. It is not inflationary unless banks start lending like a drunken sailor. Okay. Other than that, it goes into the capital markets. This is why I think markets continue to rise. Right now, what is inflationary is direct checks from fiscal policy from the U.S. Treasury, from Joe Biden, from the government. Those are inflationary because they go straight into the economy. Right, more free money. So that is inflationary. So just keep those two in context. Straight hopium, focus on straight hopium. What up, Bunky? How's it going? Never been an easier 3 months to sell calls. Yep, pretty good. User 13, I saw you at me. I don't know what you're trying to say. We ain't even 5% off the highs yet. Yeah, we're not 5% off the highs yet. Are we? I thought we got close to 5% when it comes to S&P, right? Looking at S&P, we'll get to crypto, but oops, actually, this is the wrong chart. Let's get to this one. I think we are close to 5%, bro. Let's take a look here. Let's see. Let's go. Yeah, here's the top. Let's draw that down. Today we touched, okay, you're right. 4.87. Pretty much. Pretty much. My guess is we open up lower. We open up a little lower and we capitulate tomorrow into Friday. And I think we have a rally into Friday. Could be wrong. I'm just looking at price, price dynamics. And typically you can have a rally a lot like we did. Okay. When you look at, the past correction that happened last summer, you had a real steep downtrend, right? A real steep sell off. And then you had a bounce. I think we're going to get that bounce this Friday. Maybe I'm wrong. Maybe it's next week. Either way, you should have a trend until things are starting to start to come together. Also, it was tax selling. A lot of people sold on tax. I'm telling you, this is a bullish rally. This is a bullish correction. If you're not positioned in the market, if you're already in there, you're like, oh my gosh, oh no. Also, we have anchored VWAP from the high. Okay, volume weighted average from the high, so we know where we're trailing from. This is trailing. This is going to be a dynamic resistance level, so I'm watching that also. Okay, if this cracks though, if this does crack, I'm looking at the next level, which is literally the next low. So those are my three Bollinger Band. No, I'm just kidding. Those are not Bollinger Bands. I make my own. 497, the 8% is 487. Correction in a bull market. In a real correction is about 10%. Like an actual bull market correction is 10%. Let's see where that will take us. Ooh, that's going to take us down to 470. Okay, that'll take us to 470. So that takes us to about the beginning of the year if we get a 10% correction. No, we'll see. I mean, I don't see a 10% correction happening unless those supply chains get stopped up. If the supply chains start to break and oil gets above, okay, 88, I'm telling you, oil is the signal here. Okay, and we're almost at that point. We almost broke out. This is your worst signal. Oh, come on. This is your worst signal is if oil breaks above this level. This is a strong wedge, climbing wedge. I mean, you could call it a lot of things, but if it does break out, right, energy prices are going to spike. That's going to actually cause a upside shock, which slows the economic growth. And then the Fed can cut rates, but the market's going to drop a lot more before they cut rates. So yes, there is a scenario where the Fed is cutting into chaos, and that would be high dollar breaking out, oil breaking out, rates breaking out, and then they have to wait until it crushes the economy, right? And then they go ahead and start to cut rates. So I'm watching this right here. If we break above this, we have another resistance level, right? What is this? 92. And then once you get above that, I mean, it's lights out. We're probably going to get a pretty big correction. But if you're in oil, or I'm sorry, energy stocks, you might benefit from it. We'll see. Stagflation. Yes, it looks like stagflation because stagflation, and somebody mentioned stagflation. What is it? Okay, stagflation is when growth is falling. Come on. Come on, trading view. There we go. So stagflation is when growth is falling, and these are rates up here. That would mean that GDP is falling. Okay. So the green is GDP, right? This is GDP. Now, I don't like to look at GDP. I want to see the ISM. It's forward looking growth. I want to see not the lag. I want to see the future. But either way, stagflation is when you have growth falling. Okay. So this means we're going to start falling here, and you have inflation rising. We're not seeing that yet. Inflation isn't really rising yet just because you had a couple months of going up. The forward says it's going lower. Also, GDP is rising. So I wouldn't even say stagflation. People are saying that. I would say it's reflation. Reflation is growth is still accelerating and inflation is accelerating at the same time. Stocks still climb in reflation. They climb until we get signals in the business cycle, until we get employment slowdown, ISM starts to roll over, or industrial production or retail sales roll over, whatever that is. So if we get growth start to roll over with inflation, then we're in trouble. But right now we're in reflation. That is the macro summer. That is macro summer, and the market can go higher in this scenario, right? It goes higher until growth rolls over. Then you're in trouble. Just want to address that really quick. It can definitely drop 47. Yeah, we could keep dropping, Bunky. We'll see. We'll see how the market reacts. I'm watching the macro forces or the free market forces, whatever you want to call them, dollar yields and oil, to see if they continue higher, we're in trouble. Not sure what you meant, BR research. They can't stay. They might need to raise rates and the market will keep going up. They can just stay. Okay, so we have BR research says, bro acts, I don't even know who he's talking about. Bro acts like they can just say they might need to raise rates and the market will keep going up. I'm not really sure what you're referring to. If the Fed communicates that they might raise rates, the market will correct. Keep it straight there. Jobs and housing tomorrow. Do we have jobs tomorrow? I don't know if we have jobs. I don't think it's jobs tomorrow. Let me see really quick. What do we got coming in tomorrow? Employment usually is at the end of the month. So Thursday we got jobless claims. No, we don't. It's not jobs tomorrow. We have a lot of manufacturing activity. We have Philadelphia Fed manufacturing index. These are just more so, where's the manufacturing part of the economy? It's been pretty slow. Employment, new orders, prices paid in Philadelphia. We got some Fed speak. Yeah, no employment. We ain't got no employment numbers until a while. We're not there yet. So this should be just purely price action. Look, the real thing driving markets today is earnings. So just keep your eye out for earnings for the big techs. Big tech's going to move earnings. Nvidia, a lot of people are saying Nvidia is the most important report data point, because Nvidia is driving the AI narrative of productivity, right? If Nvidia's earnings continue to climb, or at least their guidance is up, then there's going to be more investment into those chip manufacturers, which means more jobs for manufacturing chips, more growth, and the market can continue going higher. And if that growth converts or translates into productivity growth, meaning you're producing more things with the lower input, then that's even more bullish, right? That's even more bullish. So either way, a lot of inflation is consumer prices. Producer prices are not rising at a bad level. That means a lot of the inflationary pressures that you feel are just going to profits. If not cut September, watch out. Yeah, we could probably get a cut in September. Fearful or just common sense? They might cut September. Another issue is war. Look, war is the issue. War is the issue. We don't know when they're going to cut. Powell is signaling that, something is changing. We don't really know. But what we do know is that these geopolitical escalations are kind of driving the market, the VIX higher. Geopolitical escalations. Let's go to the VIX. What is the VIX looking like? We hit a high level on the VIX. Okay, this might be it, right? This might be it unless we get more escalation. Now, what I'm seeing is, and I could, maybe, there's a lot of information out there, is that Iran's not going to attack, that Israel is not going to attack. It's a lot of posturing. Okay. That doesn't mean go all out. All I'm saying is it could be posturing. You gotta have all your different conditions. If it's just posturing, then the VIX is gonna fall because it's not real risk here, right? It's just gonna be posturing. So we'll see. We'll see how that plays out. Now the volatility of VIX, right? This is a trend of volatility. Does look like it's ready to move up higher, but who knows, right? I'm not going to talk about volatility VIX. That's too much. Let's go to a little bit of the internals. Okay. Positioning of the market. We'll go to put to call ratio. Where is it? Here we go. Put to call ratio. I think this is actually giving us a signal here. Oh, I guess it's not. We're still in the middle. Well, puts are rising. Okay. The trend is rising. So people are buying puts. Healthy correction. Typically the bottom is when the puts peak out, but they're not there yet. We're not there yet. We're just in consolidation / downtrend mode for the puts, right? As this goes up, puts go up in the market. If it comes down, calls go up. It's about time though. I've been waiting. We've been waiting for this correction for a while. It's about time. Now, This is also another risk right here. This is equity credit risk. So if this goes up, people are selling the debt of the corporations, right? It's still falling. I'm not too concerned. We'll see how that plays out. Move index. This is bad, right? This is bad. Now, this is another risk. We'll see how this plays out. Bond volatility. Bond volatility is basically the premium for owning a bond. So if there's no bond demand, if people do not buy the US treasuries that are being created, and remember, the government is creating debt. They're literally creating debt that is putting upward pressure on rates, keeping mortgage rates higher. So it's counterintuitive. Yes, they're printing into the economy, but they're also pressuring rates higher, right? Now, what this tells us is that, it's going to cost more to actually sell those treasuries, meaning treasury buyers are demanding more premium to actually buy the US treasury. They're saying, look, the risk is rising of you defaulting, or the risk is rising because your deficit is so big. So we want more premium. We want you to attach more premium for us to buy. They want to buy cheaper US treasuries. That's kind of what that's telling us. It's not a great signal. We'll see. It's still in a downtrend, but if it does happen to spike, that's not going to be good. I still look at the dollar though. We want this to come back down. All right. How many stocks are above their 50-day moving average? Definitely incorrect. There's a lot less stocks in their 50-day moving average. This might have a little more room to fall. So, just wait. We're in a correction. That just brings us back to the technicals, right? Brings us right back to the technicals. And then we'll go over a couple single names. I think crypto is obviously, I would keep saying it. Crypto is the best opportunity I see going into this business cycle. All right, Bunky 20-year bond auction was bad today. It was good the other day, bad today. We'll see. There's a lot of noise out there. You don't want to get caught up in the noise. Let's see. 50. Yeah, I'm gonna move over to crypto. Seasonal correction, April to December are known to be the best performing months. April to December, Remy. April and March are kind of flat usually. It's usually like April, March. We didn't get the March flatness, so it's coming in April. And I have a chart that actually shows this. If you go to YouTube, somebody said, hey, those are seasonally strong months. Well, according to the election cycle, if we look at the election cycle, actually March is pretty weak. April is where there's a bottom, right? You start to rise in April, but we didn't get the March weakness. So we're starting to see that in April. So April weakness, and then usually October is the bear market killer. So March, April's weakness, and then we move higher. Second half of the year should be very strong because there's going to be a lot of incentives for the market to go higher, right? From fiscal policy, in my view. Your biggest threat is geopolitical risk, as always. All right. Back to actually, let's move to crypto. Here. And then I'll finish some of these. No comments on YouTube. What do you think about SEI? I'm not sure. I'm not there yet. Higher rates, more printing. Possibly. The Fed only cuts rates during a crisis. No, that's not true. They cut rates in 1995. So, and I'll show you on the chart. They don't just cut rates during a crisis. It's just typically a crisis of, if the risk is growth, that's when they cut rates. If the risk is inflation, then they raise rates. It just depends. We're not looking at any of those. Inflation is not reaccelerating at a fast pace. On trend, it's lower. It was at 9% in July of 2022, or June, July of 2022. Now we're at 3.5. That is a downtrend in inflation. We're not seeing inflation surging at all. That risk is not there. Growth is still climbing, no risk. So you're saying we shouldn't get a rate cut, but there is a time when they cut rates. They will cut rates if inflation falls to a certain level. Okay, they can cut rates. They've done it before. It's just the low probability. If TSM report, yeah, TSM looks good. VIX 18. See if I can get down there. Concerning this is happening in April. If Fed doesn't cut this year, impact will be felt. Yeah, I think we're getting a slowdown. I think the Fed is signaling to us, is throwing a signal out there that there is some. Oh, let me change this back to. I think the Fed is signaling to us that there is. So appreciate it. There is some banking, commercial real estate issues going on. I think we've seen that signal. I'm reading the Fed beige book and the Fed minutes, and they are saying, hey, look, there is some liquidity concerns in the commercial real estate sector. So what does that mean? It means we're going to get a weakness in that sector. That's the only weak sector. It is not broad-based. It is not systemic as far as we can see. And if it is, more liquidity, Fed prints. And the good thing is, if there is a collapse in real estate, then you erase all the losses. Whoever holds the equity loses out. Rates come down. The Fed can cut. Okay, the Fed can cut rates. Rates come down, and the market actually goes higher, just like it did in March of 2022. I'm not saying that's a fact. I assign a higher probability. If something breaks, it's actually bullish for the market. Because look, we're in an election cycle. Nobody's gonna let growth, collapse. Nobody's gonna let growth collapse. Um, you too, Bunky. Take it easy. Uh, all right. So back to the market here. Let's take a look at crypto because this is the opportunity in my view. This is the real opportunity, and I'm going to turn this on. I want you guys to see this. Take off S&P here. Um, the Bitcoin halving cycles. Okay, the Bitcoin halving cycles. Right. All the other stuff we're looking at, and I just want to make it clear. Look, this is the biggest. This is the biggest, the smallest asset class, and the best performing asset of all time, right? On a cyclical basis, on a secular basis, Bitcoin only goes higher. Now, the reason I want to point this out, these are the halvening cycles. When the halvening happens, going all the way to is this the first or second halvening? First halvening, right? 2012, boom, Bitcoin explodes, goes higher, finally peaks out. Okay, peaks out. Next halvening cycle, we're gonna walk through this. Next halving cycle. Okay, halving happens. There's a slump. There's a small slump. Miners have to capitulate because they're not getting paid the most. The best win. Boom, price explodes because the supply cuts. Demand goes up. Crazy. I went to 20,000 there. Okay, let's go to the next halving. This was the last one, right? You had the pandemic hit. Then you have the halving event. You had a small slump, and that's what I expect, a small slump. And then boom, we start to move up, break out. So the big moves in Bitcoin, in crypto, happen post halving. Post halving. So we're moving from crypto spring to crypto summer. Crypto summer is growth continues to accelerate. Disinflation is probably not there anymore, but we are having a lot of demand coming into Bitcoin. So that next halving is supposed to be on Friday. Now I saw some mixed signals. I think it's April 19th, if I got it correct, April 19th. So there's no event. It's not going to cause an event. But what it does tell you is once you get to that supply cut, right, fundamentally, the supply will cut. Internally, you should see a small slump. Maybe we come down to 50,000, right? 50, 51,000. Maybe, Bitcoin does retrace a little bit. If we do the anchored VWAP, I always like to use anchored VWAP. We're still in this uptrend, by the way. If we use anchored VWAP, we're looking at from this spot, okay, from this last consolidation breakout, we're looking at 50, what is this? 50,000, right? We might come down to 50,000. That's going to be my base guess is 50,000. Could we go lower? Sure. There's other risk in the market. You consolidate for a while and then it's lights out. And then it is lights out. At post halving, Bitcoin goes boom. Okay. Post halving, Bitcoin goes boom. Demand is still going higher. Supply is falling. Like it's easy. It explains 90% of the move. Pretty simple. I don't think anything else really outperforms Bitcoin. Nvidia is up already. We'll switch over to stocks. And I want to say you also have Ethereum. Okay, I think Ethereum outperforms Bitcoin. Of course, I think Ethereum outperforms. And if you're familiar with my content, I'm the most bullish on Chainlink. I'm going to do a video eventually on Chainlink, but this is where I'm most bullish on. That altcoins had a nasty retracement. This is where you get long crypto. I have to watch what I say on here, but this is where you buy the fear. This is the fear. You purchase the fear, you hold on because the next 12 to 18 months are going to be parabolic, especially after the halving, right? If you want to reduce your risk, the halving event is a guarantee, not a guarantee 100,000%, anything could happen, but is your highest probability of a parabolic return on your investment. Now, if you sell short, you're going to pay a 30% tax, right? But to triple, quadruple, 5x your money, hey, I'll take that 30% tax. If you can hold for 12 to 18 months, 20% tax. It's relative, whatever you do, right? It's your choice. Either way, this is the mega cycle, right? This is the mega cycle that we're seeing with crypto. And we're getting to a point where the returns are going to shorten on you. All right. How we feel about Tesla on the 155? Hey, great question. Interesting. They won't let the market crash before the election. Yeah, they're. I don't think they're going to let the market crash. They'll be okay with 3-4% correction if that's the case. Um. So wait, what does somebody say? What about Tesla? Yeah, Tesla's another one. Okay, we'll jump over to stocks now. We went over the crypto stuff. Tesla's a hard one. This is always a hard one. I will say this on a technical basis, we're still seeing bullish divergence. Okay, we're still seeing bullish divergence. Oh, look, the happening. Let me take that off. We're still seeing bullish divergence. And what that means is the price of the stock or the price is falling. Where's my tool? Okay. So from this point, you still have price descending. Okay. And oh my gosh, this is annoying. But the RSI, the buying pressure is picking up. So the buying pressure is picking up. That is a bullish divergence. This cannot continue. Eventually, you're going to get a breakout to the upside. When is it? I don't know. I would never get something week to week or even month to month. You have earnings coming up. You can wait till after earnings. Two scenarios here. Earnings is the final capitulation to the downside. Okay. So let's say we consolidate here. Boom, one more consolidation. Typically, after earnings, we've had a 10% correction. Either way, it's either up 10 or down 10. So I don't know. I'm not sure here. All I know is there will be a signal soon for Tesla. Depending on what happens, there's gonna be a signal. We could come down to 140, 138. And I think that would be the final capitulation. That'd be the golden opportunity for me. I'm buying leaps. I'll tell you right now, I'm getting leaps on Tesla if it capitulates that far because the RSI tells me it's going to break out at some point, and I think the bottom is coming in. I could be wrong, of course, but that's the probability that I would be willing to bet on. And if I'm a trader, well, I'm going to be able to navigate out of that if something has changed. So that's what I'm looking at. If not, the better thing to do is to wait for it to break out of the downtrend, right? Wait for the break of the downtrend. Wait for this thing to break out. Wait for the momentum to really start to come in. And I think that momentum comes while the market starts to bottom and correct. A correction is perfect. April, May, June, and then we start to reaccelerate. So we'll see what plays out. We'll see. Either way, um, I think Tesla, you just gotta be patient. There's no signal to buy anything right now. If you're dollar cost averaging as an investment, I mean, for all means, great. If you believe in the narrative, Tesla is bringing energy storage to the market. That's another thing people don't see. Energy storage, as in the biggest risk to all economies, the number one productivity hack to every global economy is energy. If you can get your energy prices lower, then GDP explodes. Tesla has the number one energy storage battery business. And as that business grows, well, it's going to be more affordable to use energy storage. And I think a lot of revenue, the energy storage business is bigger than the automotive industry. Okay, it's bigger. So we'll see how that plays out. This is a long-term play, of course. This is not a quick trade. You could quick trade it, but the risks are high for that. So anyways, yeah, 155, you said the 155 Tesla area. Let's go to that weekly. You could also see this on the weekly is the weekly might have one more pullback on Tesla. Let's take this off. One more dump. You might have one more dump right here on the RSI, a sharp dump, because the weekly hasn't really gone tremendously oversold yet. We haven't gone there in the weekly. If we do get that weekly capitulation, I think it's a buy. You don't really get those opportunities. And it's, you can purchase stock, but when it does come down here, it bounces tremendously. And this is one of the longest downtrends in Tesla's history. I mean, this thing's been falling forever. So it's still the best electric vehicle company. Model Y was the best-selling car. Yes, there's a negative narrative. It's too high, but the future is electric vehicles. The future is energy storage. The future is robotics, and it all comes down to what you believe in. All right, we invest into the future. So we'll see. Maybe it comes and makes a new low. I don't know. Either way, wait for earnings, and we'll see how things play out after earnings. I think that's a safer bet. We're already close to earnings. Constantly has bad news. Yeah. All right. AMD looks really good. I like AMD. I do like AMD. Okay, we'll go ahead and jump to stocks. Let me jump over to small caps. Nah, in play. Where's my in play playlist? There we go. So yeah, we'll start with AMD. Look, the chip narrative, the semiconductor narrative is barely getting started here. Okay, long-term trend Long-term trend, AMD is a monster. It's still in an uptrend. Now that's a big chart, right? That's a weekly chart. We zoom in a little more, right? All-time highs. We're basically testing all-time highs at the moment. AMD's tricky. The safer move would be waiting for it to come back into the uptrend, which is somewhere around 140. Does it get that low? It could. AMD is a it's a trickster. It might make you think AMD is tough to trade. It's like Tesla. It's very tough to trade. But I want to do is look at anchored VWAP. Let's throw on the anchored VWAP. Oh, I already have it up there. Anchored VWAP looks good. Let's throw on the anchored VWAP from the low. Okay. So those are your two areas, anchored VWAP, the last pullback and the last low, right? The low, cycle low, and then the previous pullback. Those are my two support levels. We're already leaking through this one. We could capitulate. But again, you might want to wait for earnings. I know people want to trade earnings. And hey, if you want to do some type of spread, whatever, good luck to you. But if we're talking about where's price headed, wait for earnings to confirm the move. Wait for earnings to confirm the move. Other than that, right? What is the actual trend we're looking at here? You want to see a break of this downtrend, right? You want to see a break of the downtrend before you even think about chasing this thing. We're still in an uptrend. I'm sorry, we're still in that downtrend. But when this downtrend breaks, gets above that level, then you might want to get interested. But you want more variables, right? It's bouncing off anchored VWAP and it's breaking the trend and it retests the previous high. Remember, green is a previous high. So if it breaks the level right off anchored VWAP, earnings are good, retest, supports, right? Show some level of support. Hey, I wouldn't mind getting into this trade. Your stop is obviously the new low, whatever the low is, boom, and then you rocket ship. Maybe not. It could do this. It could have earnings and even collapse to 140, right? That might be a buy down here. Who knows? Comes back up, gets rejected. So either way, you just want to know where the big levels are. You want this downtrend to break. And typically when it does break, AMD goes higher. The narrative is investing in chips is going to continue. That's not going to slow anytime soon. They're building gigantic chip manufacturing, or I'm sorry, manufacturing chip industries over here in Phoenix. I'm in Phoenix. They're building TSM plants, right? So chips are still in play. If anything, you want to see a pullback. This is good. You want to see a pullback in chips. You want to see a healthy correction because these things are in a secular trend. They're in a secular trend and manufacturing cycle is just picking up. So yeah, I'm bullish AMD. Um, it's just hard to pick up. You better have a contract way out or just start to scale in with shares if that's what you want to do. But I'm bullish AMD. Plus, they have a chip that is going to rival AMD. Do I know that? No, I'm not an expert, but that's what they say. So watch the trend, get your anchored VWAPs, and we'll see if it can come either here or it can support the all-time high. Now, it would be super bullish, all-time high, a support of the all-time high would be very bullish. So we'll see if we can get back above this level. If not, stay patient. Um, let me see, Nvidia, Robinhood. Now, Robinhood is one of the proxy trades for crypto, right? I mean, for me personally, the crypto cycle is just accelerating. Robinhood's going to benefit from that. Trading volumes are going to go up, XYZ, blah, blah, blah. So I like Robinhood. It's cheap. It's not too expensive. MicroStrategy is a great play, but it's very expensive. MicroStrategy is so expensive. So Hood could be good. Coinbase could be good. In this correction as the supply. I think the easiest trade in my view is crypto. I know it seems risky, but to me, the easiest trade is crypto. Here's some stock proxies to that. I don't like the miners because they're going to get cut in half. The supply is going to get cut in half. They're going to lose a lot of their earnings. So I don't like miners. I don't want to capitalize using miners. I might as well just get crypto or Bitcoin itself. All right. Have bad news. Let's look at TSM. Yeah, TSM. I like TSM. I think they're going to continue to grow. The US is literally pouring money into TSM to make sure that we hedge against any Taiwan invasion from China, which I don't think is actually going to happen, but you never know. They're going to invest here to hedge against that. So TSM always has some weird price action. I never really liked the price action of TSM, but if you see a couple supports, where did we see in support? We had a blow off top here, right? This is like 135-ish was that previous resistance. So where those 135-ish, boom. Okay. Again, comes down, checks 135-ish, checks it again. So if we come down one more time and hold, that might be a good, entry. Keep your stop tight. You want to keep your stop tight. You never know. Wait till after earnings. You're going to miss some of the move, but you do not want to be buying something in earnings and then it crashes on you. Okay. You don't want to do that. You want to wait for earnings, wait for that following day. If the volume's up, wait for the following day for some type of confirmation, right? Okay, sorry, I missed you guys on here. What up, Biggs? Oh yeah, I wasn't too late. BRC20s went absolutely crazy, like ERC20s, but Bitcoin. Oh, BRC20s. Yeah, it's crypto season. It is for the next 12 months. Crypto as a whole is going to outperform every other market. That's my probability. I think that's a 90% probability. Um, it's a small market. It's what 2 trillion, not even 2 trillion. I mean, the stock market is 80 trillion globally. Bond market 100 trillion globally. This is the smallest market. Real estate's like 300 trillion. So it's a tiny market and it's only going to grow from here. No crypto ETFs. Yeah, you can mess with crypto ETFs also. Here your top crypto ETFs. Let me go jump to them real quick before and then we'll go to the hedges. We're going to go to the hedges. Throw your questions in if you have any questions. So ETFs, really quick to answer this guy's question. You have IBIT. This is BlackRock's ETF for Bitcoin. I don't know if they have options on it yet. I haven't really looked at it because I'm not too interested. But if it has call options, I mean, that might be a good play if it has some nice call options. So you have IBIT, ticker symbol IBIT, and then you have GBTC. They all have the same pattern, right? GBTC, same thing. They're all kind of the same. You have ARK BT, you have ARK B, ARK Bitcoin, same thing. They all have the same pattern, right? It just comes down to what vehicle you're using. This thing. Oh, that's why they're doing checks on TikTok because people are using machines, and they're not really there. Okay, I see why they're doing that. Anyways, let's get back to those in play. Now, here's some hedges if oil does break out, right? If oil breaks out, I just want to throw out a couple hedges here. Number one, it's going to be oil stocks. I really hate to say it. I don't like oil, but here's some oil stocks that could be a good hedge. They are retracing. This is good because oil is retracing, right? It's having a pullback. Let's go to that weekly chart and take a look here at oil. Okay, so we have Chevron, right? Nice little flag pattern, right? Bullish flag. It's coming from the lows. A nice bullish flag pattern, and I'm gonna attach anchored VWAP from that low. Can we hold this? Can we go higher? I'm not teaching how to get in, how to get out, but these are just opportunities you can look at. Once you break this flag pattern, right? You get a break and retest. That is always your safest option. Not trying to chase everything, but get that break. You get the retest of the previous level. Maybe it tests a couple times, right? That's what you want to see for Chevron. ExxonMobil. I didn't like ExxonMobil until I actually kind of saw the correction. I'm like, okay, well, this is clear. This is a clear uptrend, right? This is a clear uptrend, and it is having resistance. Now, the fact that there's so many resistance levels on Exxon, oh, you know what? I'm not sure if anybody, I'm sorry, I lost my Instagram feed. Hold on. Make sure nobody's asking questions on Instagram. Where'd it go? Did I lose it? Because I didn't want to leave the people out on Instagram. It looked like it. Oh, there it is. There it is. Okay, I see what happened. No comments on Instagram. All right, just wanted to make sure. If you do, let me know. All right, back to the chart. All right, so anyways, Exxon, look, you have multiple areas of consolidation here, of resistance, right? What does this tell you? This is a lot of people either shorting or they're going to sell calls. And once you get above this level, momentum should pick up. So 1, 2, now 3. Perfect. I like this. I don't want to just see a breakout. What I want to see is a breakout, a retest of that level. And I want to see it turn this level, which is about 120-ish, right? 120-ish. I want to see this turn into support, right? What does support look like this? Now, it doesn't look exactly like this, but you're going to see a support. Once I get that confirmation that there is buyers now buying the resistance, turning it into support, then that could be a nice hedge. Could be a nice energy hedge right there. Okay, so look out for ExxonMobil. And then last, this thing has been on fire. Okay, and it has a nice momentum. This looks like oil. This is a Marathon Petroleum. No, my bad. This is ConocoPhillips. ConocoPhillips. with the wedge pattern. This is my favorite pattern, going long. So nice wedge pattern. It's already breaking out, which is why I like it. It's already breaking this level. It's starting to retest about 125. If I see some support around 125, right, and it starts to boom, 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 I like that. So ConocoPhillips, another one. Take your pick. These are just opportunities. I'm not here to tell you what to do, just to provide information, context, and try to get help enhance your investing, your trading, whatever it is. So we got those for energy, and then you also have insurance. I'm not a fan of this. I don't like this. It just moves straight up, right? I don't like that because it feels weird. It feels kind of sketchy. That could just be me. This is not a daily chart though. The daily chart probably has a better entry, but you have progressive. Yeah, it's a progressive insurance. I'm not interested, but some people pointed it out. Progressive, what, 201, 202. I'd rather just be in crypto personally. For me, crypto is going to outperform all these things by far if you just stay patient. But those are some hedges. Um, and then we have deer. We'll see when this comes into play. I'm not sure. Those are the main hedges though that I have for today. There's probably other hedges. PA strong oil pipeline. PAA. Okay. Okay, PEA looks good. Now I just want to see the market cap and I want to see a good pattern. I don't know what the market cap is on this, but I'll keep this in mind. PAA, Plains All American Pipeline. Nice. I just joined. I might have missed you talking about this, but do you think SPY will continue down? Dylan, yes. I think SPY has some, it's probably going to bounce by Friday. And then I think it continues lower. We'll see how earnings come out. It's either lower or sideways. I don't see SPY having until the dollar comes back down. I think SPY is gonna have some trouble. So watch the dollar, watch the US dollar. Okay, so here you go. Bigs. I'm cautiously optimistic. This Middle East stuff won't escalate as far as it could. Each country kind of has to position themselves like they're gonna Yeah, exactly. Yeah, I think they're just they're posturing just like people do, just like dudes do. They're just posturing to make sure you better respect me. But at the end of the day, this will tank their economies, and the long term goal of being a global power is out of the gate. It's done. If you cannot protect your economy, you cannot cause a war. You're done, right? You have to protect your economy, and if a war always crushes economies. So we've seen that. We've seen the 21st century, World War One, World War Two. They all resulted in somebody collapsing. And you know who benefits if there's a world war? China. China benefits because they never enter a war. They're going to sit back and they're going to actually feed the war while everybody else goes into it. So it's in everybody's best interest to not escalate, but they are going to posture, right? And they're probably posturing for the citizens to at least contain or at least keep the respect of the citizens who are like, hey, you can't let them do that to us. So they're probably trying to keep the respect of the citizens, the sentiment, whatever it is, but it would be not in nobody's interest to start a war at this point. Middle East politics is one a big game of brinkmanship, showing off each other's bigger sticks while silently hoping things don't escalate. No country can appear weak. Yeah, exactly. Nobody wants to appear weak. Always feels weird talking about how wars affect markets because it's people's lives we're talking about, but we obviously can't be head in the sand. Things still affect markets. Yep. Uh exactly what you're saying. Yeah, exactly. We'll see what happens. Look, I mean, the war, yeah, energy prices are always the proxy to war, as in it's always a war. It's an economic war. All wars are about economics. They're always about economics first, because if you run out of production, you have no war. You're done. That was the Cold War. That was World War II. There was more economic power and more allies, and yeah, things end. So either way, watch the economic. Where's the flow of money? That's going to tell us where things are going. I don't think the war escalates at this point. I don't think it escalates. I think there are negotiations in place where it's like, hey, no, nobody wants this. I think there's negotiations in place. We'll see how it plays out at the end of the year. I think there will be a lot of concessions. The US is probably going to have to make some type of deal with somebody in the Middle East or with China, some type of trilateral agreement, world trade, trilateral agreement, kind of globalization to get everybody happy again. So we'll see. We'll see how things play out. But that's all I have for now. Check PA. I looked at that. That's all I have for now. Look, the business cycle is reaccelerating. Inflation is kind of sticky at the moment, but it is all eyes on earnings season. Corporate profit margins are rising. Profit margins are rising. Industrial production is rising. That's a business cycle. Retail sales are rising. Liquidity is right. I mean, all these things are pointing to an acceleration of the manufacturing sector, while services, which I'm going to show later, services are cooling off. That is perfect. It's called a rolling bull market, or a rolling rolling growth. Services cool, right? Prices come down for services, while the manufacturing takes the lead on growth. And asset prices typically respond stronger to the manufacturing cycle. Okay, the risk assets, the ones I like, the growth stocks, the growers, because there's bigger margins, people make bigger purchases. So that's what I'm looking at. Remember, seasonality is usually we're in the season of weakness. Tax is over. As long as there's no geopolitical escalation that is meaningful, watch oil, watch the dollar. We're on for a bull market to the end of the year. Things are looking pretty hopeful. Would you say, Biggs, are you much of a history fan? I'm a big history fan. I actually put a lot of history into the course that we're building, right? The course that I'm building right now, there's a lot of history to show you how bond rates, how the bond market reacts when this happens, how oil reacts when this happens, how the stock market, how the dollar reacts. I'm a big history guy, going all the way back to Alexander the Great. I love history. I'm a nerd for history. I always try to learn. Actually, on my off time, I will watch more history because I want to know how these things work. It's always about money. It's always about money, not just money. It's about the means of production. Who can control the resources and the means of production? That is always the aim, right? Because money is the outcome. So controlling the economics is the stem. Everything stems from economics to some degree. Any Forex? No, I'm not a Forex trader. But I will say this: if you're a Forex trader, the ECB is about to cut rates before the Fed. Therefore, the dollar should still appreciate against the what is it? The JGB, or what else currencies are there? The Swiss franc? Maybe not the Swiss franc, but I'm not doing Forex at the moment. Either way, business cycle's turning up, and I'd say, hey, crypto is going to outperform. Remember those words. I'm bullish Chainlink. This is not financial advice or for anybody to do anything, just educational purposes only. And to give you some more context, maybe a different view of the market. Who are we looking at here? Tesla. Come on, Tesla. Let's go. Either way, Bitcoin. I think the most important thing here, right? BTC, is that we're at the halving event. So if you do, and also for some of you guys out there, I'm starting to explore iron condors. And, hopefully by the time I'm done exploring the iron condors, there will be a nice strategy that we can go over together and try to benefit from the iron condor. It's a safe bet. It's a way to, create a safety net. Very low risk option strategy. So, and I'm learning how to do it on Robinhood, and maybe we'll go over that. Still building the course for you guys, trying to do as much as I possibly can without burning out. So I know the timeline is off. Either way, this is it. This is the bet, right? This is the biggest opportunity right now, not just Bitcoin, but crypto in general, Ethereum, Chainlink. I'm not going to say any other names. Solana probably goes higher, but this is the big opportunity. This is the strongest cycle of all asset classes. Nothing is rivaling the crypto cycle. Nothing is rivaling the crypto cycle. Dang it, you're asking me World War II stuff? What up, Ken's? Good to see you too. Okay, I'm kind of nerdy. I'm going to answer this stuff. This has nothing to do with markets. Are you much of a history fan? I agree with you saying how war is economic. Blah, blah, blah. Do you know how this was at play in World War One? Yeah, so World War One, going back to World War One, basically, okay, so we'll switch things up a little bit. Going back to World War One, you have to see the Dow. Check this out. Dow. Let me go to the only market that can track this, because I actually have a little bit of World War One on here. It's let's go to the Dow. Where is it? It's the big index. Before there was the S&P 500 index. Come on, DJIJ. Where is it at? I know it's on here somewhere. Don't tell me I lost it. What would I do with mutual funds? What up, Tanner? Hey Tanner, we got to do a video soon going over Zillow to show like how to skillfully and strategize buying a property. I know some people that wanted to know that. We'll do it soon. We'll set that schedule up. We got to do that. Oh, there it is. Okay. So you want to know about World War One? Well, typically what happened in World War One is the Franz Ferdinand was assassinated, right? Some Serbian nationalist, you know, I don't know what words I can say on TikTok, so I'm going to keep it. He went after and he ended the Prince of Austria-Hungary. But see, the Prince of Austria-Hungary didn't even want to be the prince. He didn't even want to go to war. He said, I don't want to go to war. But the generals, the military industrial complex, wanted to go to war. And as soon as he accepted the prince crown, boom, he's gone. So I think it was an inside job by the military because they had Germany backing them. Germany was one of the super industrial powers at the time, and so they wanted to, they wanted to go. Now, what ended up happening with the U.S. is the U.S. dollar started to strengthen the stock market. This is why I bring this up. Let's go all the way back. The U.S. dollar was nothing. It didn't really strengthen until World War II. But if you go all the way back to 1906, this is World War II, right? Or World War I is right about started the 14th. Okay, so this is the stock market. 1914, World War II, World War I starts. So you had a sideways stock market and then you had a gigantic tank. Now, this was a big move. Check this out. Okay. It went up 94% because the US was producing for the war and they were helping out the war, blah, blah, blah. Right. And then eventually it tanked because global debt inflated. There was a big bond market, collapse, blah, blah, blah. And then you had a bigger collapse because everybody kept printing. So this was reflation. Basically, inflation and growth picked up. And then inflation continued. This was stagflation. Inflation continued to rise. The inflation rate was like 28%. And growth started to roll over. And I actually have some of this inside of that. I have some of these charts inside of the course. And boom, stagflation, the market drops. This is one of the biggest drops in history. This was the stock market. There was I guess it wasn't that big, 46% drop. And then what did we do? We made Germany pay reparations. All Germany did was print money and send it to us. So we had free money. So Germany prints money, right? They destroy their economy. Our economy goes higher because we benefit world trade. And then we collapse because we got this was the biggest bull market of all time, by the way. The roaring 20s. Biggest of all time. 461% in about 8 years. 8 years, and then followed by the biggest collapse of all time. So there's just different ways. I'm not going to do a history lesson today, but I am a fan of history. I look at the markets. How do they react? And the thing about history is markets always change. I've noticed that what happened 20 years ago, 50 years ago is not happening the same because things do change. Technologies take over. They do different stuff. And I think what's happening now is technology. We're starting to get we're getting productivity growth. The technologies that are hitting the market today are creating more output per unit of labor. Very bullish. I don't think inflation is going to be this massive reflation like the 1970s. What people miss is in the 70s, there was the Yom Kippur War. Oil spiked 100. Oil went up 10x. It went from $3 a barrel to $30 a barrel. We're not going to do a 10x. We're not going to see oil jump. Where's oil at? Right? That's not going to happen here. Like, there's things in place for that. That's just ridiculous to me. That's crazy. We're not going to see oil jump from $80 to $800. That's not going to happen. That would be a global collapse. So that was the 70s inflation. Oil jumped from like $3. If you could fact check me, it jumped from about $3. Watch US. Let me see. US oil. US oil. I think this is US crude oil. Let's just go back. Maybe it's not, Yom Kippur. Let's go back. I should be able to go back far. Man, why isn't this letting me go back? Well, here it is right here. You can't see it because for some reason it's not showing. Actually, let's turn this into lines. It'll be easier. There you go. So this was the Yom Kippur War around this area, around this time. Look at oil, $3.61. Okay, over the next 5 years, it spikes to $40. That was a tremendous shock to the economy. Your energy prices go up 10x, employment spikes. You cannot, only ones who benefit are the ones who have the oil, but you're going to collapse all economies. Okay, now today we're not seeing that. I'm sorry, we're not going to get that. The US is now the biggest producer of oil, and we have tools in place to make sure other countries produce more oil. We have to give something up. There's a trade-off. Who knows what that trade-off is, but we're going to do it because we got to keep the price of energy lower. So either way, yeah, we're not going to see that type of reflation. It's not happening. Production is picking up. We have more tools and we're transitioning slowly over to electric nuclear power, right? That's why there's a war in North Africa at the moment, because there's a war to get the uranium in, I think it is in Niger. Niger has a bunch of uranium and they need that uranium to fuel in France. France is one of the, uses a lot of nuclear energy to fuel energy to get energy prices lower. So there's a war for energy at all times, right? That is the thing we got to destroy. Once we get rid of the scarcity of energy, right? We move and we transition over to batteries, then economies are going to go up tremendously. We're going to see tremendous growth in the stock market when Tesla or these solar energy storage companies actually, I call it a mega trend. Once they come out, it is game over. The market's going to explode because now the cost of doing business collapses by 50%. Now you got labor. Now you got robots who actually work 24/7 for no pay. I think, I see a big future. I see an optimistic future if you, stay up with there's a lot of people out there very pessimistic. I'm very optimistic. Stay invested, keep learning, stay healthy, eat healthy, lift weights, take care of your health, take care of your relationship, your faith, whatever it is. And things look good. Anyways, that's all I have. Do I have a favorite? So you have a favorite 9:45 a.m. stock? I don't even know what that means, stock scalper. I'm not sure what you mean by that. But anyways, I'm out of here. Uh, hey, stay blessed out there, right? You guys stay blessed, stay healthy, and keep learning, get better every single day. Appreciate you guys again. Don't forget to like, subscribe if you can. Do me a favor, give me a little likes, give me a couple likes, jump over to YouTube, subscribe to the YouTube so you see the video. I'd appreciate it. Get a little more, helps me out. That's all I ask for. Other than that, trying to bring as much value as I can. I'm trying to finish out the macro course, technicals, fundamentals. I'm starting with macro though. You guys are going to like it. This is going to be good. It's going to be clear, concise. It's going to be easy to understand, interactive. Stay tuned. All right. Appreciate you guys. Stay blessed. Catch you later.